If you are a US NRI and you are planning to invest in Indian markets, then this video is a must watch for you. So there is a concept which is by the name PFIC guidelines, which is applicable to US NRIs. So let me explain you PFIC guidelines. So PFIC means that passive foreign investment company. In simple terms, apart from the definition, it means that any investment that you are doing outside US and the main motive of that investment is to generate some passive income out of that, then that will be categorized as PFIC. So there is a separate body which is responsible for enforcing the tax in US, which is by the name IRS, Internal Revenue Service. So if a non-US fund earns passive income like dividend, capital gain, the IRS, which is Internal Revenue Service, classifies that investment as PFIC. So basically you are doing an investment where the main motive is to generate some passive income and that investment is done outside US, then it would be categorized as PFIC. Now coming on to the most important part, which Indian products qualify as PFIC? So if you are doing investment in mutual funds, if you are doing investment in ETFs, if you are doing investment in AIFs, if you are doing investment in ULIP, if you are doing investment in any pooled structure or any foreign funds which are not domiciled in US, then your investment would be categorized as PFIC. Now what happens to the taxation part? So PFIC taxation is very harsh and very high. Gains are taxed at highest US tax rate, plus there is an interest penalty also which is applicable. And you also have to file a lot of compliances are there, and you also have to file a form which is by the name 8261 every year. For each PFIC period you have to file this form, and it's one of the most complex and expensive tax rules for US NRIs. So whenever you are investing, you should always think from taxation point of view as well, that wherever you are investing, you should not fall under PFIC. And what are not PFIC investments? Let's talk about that. So these are safe investments and these are not PFIC investments. So one is direct Indian stocks, then direct Indian bonds, then you can also have US listed ETFs. The fourth one is PMS accounts, where the investment is held directly in your name. PMSs are a good option for US NRIs, and obviously if you can manage your own Indian stocks or Indian bonds, then you can directly invest in that. So this was all about PFIC guidelines. We are not tax experts, we just have our own limited knowledge. Thank you so much for watching our video. In case if you are exploring PMS and AIF options, you can get in touch with us. Thank you.